It was a very volatile day on Friday across the board as the markets reacted to the news that the UK had voted to leave the European Union. This came as a big surprise, and that's why we saw such strong moves. Share markets around the world were sold off in response, with the weakness emanating from Europe and to a lesser extent the UK. We also saw some big moves in terms of currencies. The US dollar strengthened, as did the yen, while the UK pound and the euro fell sharply. There was a flight to quality, and investors looked to gold and other safe haven assets like government bonds and quality fixed income. In terms of the impacts for New Zealand, we won't be immune to all of this, but will be slightly more insulated than other parts of the world. Our trade with the UK is much less than it used to be. These days we export about 4.5% of our goods and services there. So while it's an important market, it's nowhere near as important as Australia, the US, Japan, or China for us. A big part of the impact on New Zealand will depend on what happens with global growth, financial market volatility, and most importantly, confidence. In terms of where to from here for markets, it's very difficult to predict how long this uncertainty will last and how long this will be hanging over markets. It could be a long and drawn-out process for the UK to extract itself from the European Union, and it's this uncertainty that is really causing such caution. In terms of currencies, we would expect further weakness from the British pound and the euro, while we'd expect strength from the US dollar and the yen. The New Zealand dollar will therefore probably strengthen further against the pound and the euro, but potentially weaken a little bit against the US dollar. This certainly raises the prospect of further OCR cuts from the Reserve Bank of New Zealand, as central banks around the world will likely have to do more to support growth. In terms of share markets, for the time being we would expect further volatility and potentially more weakness in some of those troublesome areas that will be most affected, most namely Europe and the UK, and further down the track, potentially emerging markets. The New Zealand market should hold up relatively well. Our market is not as leveraged to the UK or Europe as some others around the world, and we still have many things in our favour. Our recommendation to investors would be to keep calm, not to panic, and wait for the dust to settle before re-evaluating their strategy.